Good morning. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever, ever risk money you cannot afford to lose. Hello, hello, hello. Chuck, how are ya? How's your mum? Yeah, I'm just finishing breakfast. Hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. I appreciate you. They appreciate you. I do these sessions every morning. The overriding goal of helping you become a successful foreign exchange trader. One is patient, one is disciplined, and one that is profitable. So please get involved, ask questions. Let me know what's on your mind. How can I help? I am, let's say, a humble and simple trader, and you are my boss, so let me know how I can help. If you're new to these webinars, first of all, my chart templates are available down below in the description below the video. Just click on the link. It's charts.fxbootcamp.com, and you can download my chart templates. Make sure you get a trading account at tradersway.com first. Also, if you are new, please subscribe and please like. Please leave a comment. And ask questions. Get involved. Become part of the team. So, up until just a few minutes ago, I had no idea it was Monday. Isn't that funny? Just like, really? It's a Monday? Really? One of those weeks already, huh? All right, so let's start top left. Listing. Let's change this. Euro CAD. La 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 la. A bit low. Okay, it's a bit low unless you're going to do an inside week. So there's two scenarios in this one. There's this, or there's this. Okay, this being a high, this being a low. So it just depends if you're a bull or a bear, that's all. Mark your lines. La 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 la. Yeah, gotta mark that one. Go back in on a smaller time frame. So anyone that wants this to work its way up has to start looking for something like this. Okay. It says, Wayne, I'm thinking it's wrong. It looks like indices are about to make a big turn to the downside. Okay. Well, we already know that. So that's already a given, right? Isn't the plan for the yen pairs to be, what the plan was, yen, so these are yen pairs. Oops, JPY pairs, right? So the yen pairs were supposed to fall in the first and second week, false rally in the third week, and then continue mission through the end of January, right? Right? Chuck says, so was that the worst Chinese trade data have you seen? No. Okay. So this is the plan, right? Right? I just want to make sure, like, we know this. This is factual. I don't have to say it every single day. I've been saying it for 6 months, right? And so what we don't know is, did this false rally happen in the second week instead of the third week? Okay. And how does that affect the schedule of the retreat? Right? So in that case, it just sets things like, if you think the stock indices are going to fall, so let's just pick another one. Is this a yen? Yeah. If you think the stock indices are going to fall, great. Then create a trade plan, right? That's it. Cash says, so this week potentially false rally week. Well, what we were talking about before is it probably already happened. Okay. We got exactly what I wanted, a big yen drop in at the beginning, like literally the first week. The yen, all the yen pairs are supposed to drop. And let me ask you, and I know there's a little bit of a delay, but let me ask you, was the yen move supposed to be like a little move, minor, or was it supposed to be major? I guess it's minor, I can't. The first week, oh man, I can't speak and write. Okay, was the yen pair in the first week, according to the Gospel of Wayne McDonald, was it supposed to be a minor move down or a significant major move down? Yeah, so, but what does that mean, right? I don't know. It's right. And what day does it move, and where does it stop moving, and like, I don't know any of these things, and I'm telling you a year in advance. So so did we get the major drop? Yes. Major, so major, we'll do it this way. Major drop, did we get that? Yeah. So the next thing is there's supposed to be a false rally. Right? We talked about this a year in advance. So this might be it, right? That could be it. Check. So what's the third one? Right? JPN strength. Okay, for a while, right? Right? Anyways. So if you think we're setting up for this yen strength, well, then that means the stock indexes, if you want to say it that way, index. It's indices actually. Indices. Okay, stock indices will then need to go down because you know the correlation between the stock indices and the yen. So that's what I'm saying. We already know that. So if you said your analysis tells you that the stock indices are about to fall, yeah, well, I told you that a year ago too. So if that's your case, if you're looking at technical analysis to confirm your hypotheses that the indices are going to fall, then you need to start looking for, patterns on the Japanese yen pairs for selling those pairs, right? So I'm just reiterating, we've discussed all of that. So it wouldn't have been, right? I thought we discussed more momentum in the first weeks. What do you mean by momentum? How's it, what do you mean? All right. Yeah, no worries. Major moves in the first few weeks. Yeah, but I still don't understand what your momentum means. No, yeah, no, it's okay. There is a lag in the chat a little bit, so we have to deal with that. But yeah, so down, up, and down. Okay, and then the next two important things. Someone mentioned the Bank of Japan coming up, and okay, those are good. But there's a what is there a March meeting, a Mar meeting, and a June. Okay, so you're going to sort of see things around those meetings as well. Okay. So I think there'll be a move down. I think there'll also be a rally somewhere in there between March and June, and then a repricing around June, and then a preparation for summer. Is it Taba or Sarah that's subscribed? I guess both of you guys. All right, Taba. All right, Sarah. Welcome to the family. Birds of a feather trade together. Cool. So look at the trade plan from here. Okay, check that out, huh? I think I had a plan A and plan B, but both were going to end this way. If I'm misremembering that, I apologize. Okay, but the idea was basically like sell off here or sell off here. Okay, and there was multiple reasons, as you can see here, as you can see here, as you can see here. There's 3 reasons why that wasn't likely to go higher. Okay. Sure, Paul. Long. Yeah, okay. Yeah. So the lower low doesn't freak you out, huh? Already long. Okay. Trying to get this across. Really? So right now, because both of those trade plans were short, so you're long. Okay. You're long of. So you think we're going to go back up to the monthly? Front run it from last week. Off the central. Yeah, okay, yeah. So oops. So like this, you have it this way. Gee whiz. Oh, Brooke is short from last week. Yeah, okay, that I see. Because there's this thing here, and then there's this thing here, and there's this thing here, and there's this thing here. So somewhere in there, it's more likely to fall. I'm trying to find the long here. There's a central pivot here, and there's like a roll reversal here. Pretty aggressive entry, I think. I guess and there's no pivot of support, which bothers me. And did we ever talk about the inside month on this? Okay, I'll flip over on the 4. I'll look at it. Did we mention the S1 R1 possibility for an inside month? Not sure if I did. So let me find it. Okay, it looks better on the 4 hour. Okay. Yeah, I see what you mean. I don't. Oops, I almost spilled my coffee. I don't see the respect on here that I would prefer. And the 55 tells me double top. I suppose the part that, because I have to be an open and honest with myself, right? So if I don't see it as much as you, I'm not saying you're wrong. But my trade plan last week was either sell here. Well, let me back out. Let's do it this way. My trade plan last week was much more, sell here, sell here. And that's going to influence me, right? Is this support? Is this a role reversal? Yeah. I see all of that, but we're down here, which is not quite the same. All right, so you're going to look at support here around 114.50. So I guess before I drink that Kool-Aid, I'm going to need to see an up. But here's the problem. Price action has you selling this, doesn't it? I mean, there's going to be a bit of a fight here because this is built in already based on price action, right? Anyone using price action is going to sell this with a vengeance, right? Yeah, maybe Brooke is the way that Brooke says it. It's gonna go up, but it needs, yeah, but it needs to clear out a lot. I'm just also like, besides that, I mean, we missed the monthly target by a very, very small amount, right? Like, this is the conservative target for the month, right? And based on pivot point analysis, this tells us that this is likely the target for the month, right? So is that useful information? Is it done? Is it not done? If we expect a stock market decline in the next week or two, what direction does euro dollar go? Up or down? Down. If the stock markets fall, euro dollar goes down. Not USD down. No, USD up, euro dollar down. No. Guys, when the stock market is falling, the US dollar gets strong. Make sure you know that. No, Emil. When the stock market falls, the US dollar gets strong. Let me say it again. Yes. If the stock market falls, the US dollar gets strong. Yes, Joe. So that's why I'm saying it a third time, just to make sure. Okay. So if you thought, so, you know what I mean? Like, so it's not a great entry. I'm wondering if you took it like right at the market open or right at the market closed, and therefore, well, then you took the risk, and I'm concerned about managing the risk, though, at this point. See, like, I'd rather an entry look like this when you're going long, okay? Like, I don't see the pivot in here. And when the market opened at 5, I mean, how did you trade it? I guess a double bottom. But again, hanging out in no man's land, double bottom, doesn't make me feel good. So often what I'll do is wait for it to do this. And then I'll say, aha, 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 right? You got the monthly, you got the weekly, you got the higher high, great, ciao, right? Okay. So again, I'm not nitpicking. I'm not saying you're right or wrong because I don't know that either. I'm just trying to give a little bit of finesse on maybe a better entry. I see the role reversal and stuff. That's fine. But there's a lot of other little whispers in the wind, right? Just want to make sure that's not missed. Okay, if the stock market falls, gold should go up, right? We're in the middle of a range, so this is not a good trade, but that's the right price for a bull. Okay, can you buy it now? Absolutely not. Okay, but if you think the stock market's going to fall over the next couple of weeks, and by the way, it's earnings season today, so maybe that's the catalyst, right? Can't we all agree on this same? Well, if we did that, then trading wouldn't work. Okay. You know my opinion. I gave it to you a year ago, and 6 months ago, and 3 months ago, and 3 weeks ago. So you know my opinion already. But there's a timing to it, right? I've shared with you my hypotheses. Okay. So what I'm telling you is if you think the stock market's going to go down and the dollar's, right? But you want to look for, again, is it an American move? Is it a global move? So there's two situations here. Gold could go up because the stock market's doing well and dollar weakens and it's the anti-gold or the anti-dollar. But keep in mind that in that scenario, which you will probably find in textbooks, that's more related to inflation than it is risk on. Because gold doesn't pay you interest. It's not a risk on scenario, but it's an inflation hedge. But we don't have enough inflation to hedge, right? How many people are really truly worried about significant inflation in the short run? Many people say that gold is wow. See, I don't listen to many people, but all right. So I'm just trying to explain why it would go up or down, right? So in this case, I don't really look at it as an anti-dollar, but more of a risk on, risk off type thing, right? So if the stock market's falling, people are going to get out of the stock market and move to cash. What are they going to do with the cash? Buy bonds, buy gold, that kind of stuff. Okay? So 1320, huh? That's funny, the many people think. I can't wait until they start quoting you. Right? That's probably when I listen, when all those people are quoting you, and I'm like, really? 1320. Well, that first of all, that's a bullshit number. 1320 is meaningless. I can tell you right now, looking at my chart. 1326 or 1315 or 16. I can't quite see that. 1314. It looks like 1314. $1,314.30, or 1325 and 42 cents. So your 1320 is a guess, random sort of out there somewhere number. I'd give them a range, like here. Okay. So first of all, right off the bat, whoever these many people are, be very careful, because if they're right on direction, they're really fuzzy on target. So what it smells like to me is somebody's like, yeah, it's 1320. Okay, all right. Maybe there's another line in the sand, or no. All right, so I'd be careful about those people. I'm not saying they're wrong. I'm just saying they're wishy-washy. 1426, yeah. Year one is 1323. Oh, that's interesting. Is that right? That's cool. Sounds pretty fancy. Can't put your kids in there. Yeah, I like to buy things like, Harvard for my kids. So this is going to be a massive challenge to whoever's trying to head up. But let's pay attention. Okay. So earnings season is going to open up a little different this year than most. A different order for some reason. In I think it's Citigroup that reports today, which is weird. So and that report's going to be bad. JP Morgan's, I wouldn't expect to be bad. Wells Fargo's a weird one, right? Bank of America. So anyways, those need to come out, and that might be the beginning of the drop. Okay. Chuck says cigars. Oh, did it beat? Okay. Well, yeah. Oh, okay, good. All right, so what's the price action tell you on this? Who cares what your fundamental opinion is? What does the price action say? Drop it like it's hot. These are the two prices in which WTI is going to get spanked. Okay. So right now, that would be the trade plan. And that's indicative of the falling stock market, isn't it? Yeah, well, you got to take profit, right? So cash, people are trying to get out of Citi. So a pop is going to give them the opportunity for the drop. They're generally announced in the morning before the market opens. Yeah, China's slowing. I hear this a lot, and I hear it with when it's said in the media, it sounds like China is collapsing, doesn't it? Like, there goes China. but it's slowing. So instead of growing like this, they're growing like this, but they're still growing. Okay. So just be cautious. Just be cautious of what you're paying attention to. There's definitely some worrisome numbers, but I'm just saying, just careful. Yeah, normalizing. Maybe. Is it fundamentally important? Sure, in the sense that how much does the stock market affect foreign investors? Okay, that's one thing. Are foreign investors invested in the U.S. stock market? Okay, and will they add more to their investments, or will they withdraw their investments? That'll make money cross a border. Okay, and then another way of looking at it is, how does the stock market impact consumer confidence and they're willing to consume? Okay, that's important. So marginal propensity to consume is pretty stable, but it's affected by future expectations of income. So before you got to go to future, you got to ask where we are now. Do people have jobs? Do they have good jobs? Are they getting paid? Then you have to say, do they expect to have a job in the future? Do they expect to have a better job in the future? Are they expecting to have more, not just income from their job, but what about wealth? So now you have to look at household wealth. Do they own a house? And is the house going up in value? Do they have a good job? Is it paying them good money? Do they expect to have a good job in the future? Do they expect to make better money in the future? And all of that leads into consumer confidence and consumer spending, which we know is 70% of the U.S. economy, right? So that all goes into the marginal propensity to consume. So let's say you spend 80% of your income. Maybe you even take on, because you think your job is good and that it's going to be around for a while, you don't mind credit card debt and all that kind of stuff. And if you need to make a big purchase, now that your house has gone up in value, maybe you can do, what do they call it? The refinancing, pull some money out of your house and buy your big, purchase. All that kind of stuff is really good. And that would affect China, right? But remember, the United States has an economy that's 70% of its own consumers. And the rest of the world sucks right now. And you might not know this if you live in the United States, right? But if you don't live in the United States, it's probably like, yeah, welcome to our world. Well, America's doing really well right now. And we're buying crap from China. There's no doubt. But Europe sucks worse than most places. Europe is not importing. And I told you this, my gosh, we talked about this 3 or 4 months ago, right? I said, look, the statistics are now showing the Europeans are not importing. Well, what does that mean? There's going to be a China slowdown. Is it the United States? Or is it the fact that that the European Union is stifled in socialism, which is not good for business? And then the British decided Brexit would be a good idea now that they're just recovering from a financial catastrophe. Somehow they thought that was a good idea. So if you remove the 800 million of the UK EU bloc, maybe that's what's impacting China. But right? And what did I say 7 years ago or 8 years ago? I said, instead of China doing a huge $1 trillion stimulus to save its own economy, they should go to Europe and give it to Europe or buy Europe. I think I actually said buy Europe. China should just buy Europe. with the $1 trillion and prop up the European economy to save the Chinese economy instead of giving a false stimulus to China. Just give the money to their customers. Buy Europe. Right? We'll change bonne nuit to ni hao. So I think that's kind of the stuff that's going on in the background. Benny. Okay, Benny, I apologize if I struck a chord. But, Benny, it's a capitalist, it's a socialist capitalist economy, not too dissimilar from Canada. Okay, Benny? And Europe, when you study its form of capitalism that leans towards socialism, I know that socialism is a pretty bad word for a lot of places, okay? But there is an economic model in place, and it's been the European way for a long time. I'm not saying it's good, I'm not saying it's bad, because at least it's capitalist. But the European form of capitalism creates, how do you say it? The output is higher unemployment. And what's the other component? I'm drawing a blank on it. Higher unemployment and what would it be? See, I don't have it memorized. I'm just thinking. Higher unemployment, maybe. I'd have to look up my own paper. Benny, well, first of all, I clearly don't have an idea of what socialism is. Our definition we'd have to agree. So I don't want to get too far off of this. There's different forms of capitalism. There are strengths and weaknesses to each form. The form of capitalism in the United States is different from the form of capitalism in Europe. They both have different strengths and they both have different weaknesses. So I'm not saying Europe is bad, but they're suffering from their own consequences. Now, I said that 8 years ago. China should buy Europe because China still had tons and tons and tons of foreign exchange reserves. And Europe clearly was on a bad path. Like, think of the time when Greece had bonds paying 25% a year because no one would invest. Yes, you're right, Benny. As soon as you brought that up, I realized it's going a little too far, but it's a socialist leaning form of capitalism. And again, Canada does this. So, like, for example, universal healthcare for all, right? That's one form of distribution of wealth to say, well, we think as a society, everyone should have the right, no matter how poor they are, to a basic level of healthcare. Well, that's not capitalism. Capitalism didn't say that, right? So therefore, that is that's a little add-on to a little bit more socialist leaning, worker leaning. I'm not saying it's a bad thing, nor am I saying it's a good thing. It's just a thing, right? And then when you say, well, let's have a 40-hour work week. Well, go to the Silicon Valley. Nobody works 40 hours. Are you kidding me? You work 100. Oh, all right. So whatever. Someone came along and said, well, that's too much for the workers. You shouldn't have to work 100 hours a week just to keep the boss rich. So we're going to tweak the rules, and you should work, I don't know, 40 hours a week seems like enough. Well, once again, that's, ching, a little bit less capitalist, a little bit more socialist. I'm not saying it's good. I'm not saying it's bad. It's a way to design an economic system. And you can go this more and more and more. How easy is it to hire someone? How easy is it to fire someone? What happens if you're an entrepreneur and you go bankrupt? All these different things. Like, how do you handle these economic decisions? And the decisions you make, or the answers you give to those questions, determine how much or how little you are capitalist, or how much you are as a socialist or not a socialist. Are you favoring the worker? Are you favoring the owner? Which one? Where in the middle? And how much in here and how much in there? Okay, yes. No, well, back to the markets, but it is economics, and it is something to study and understand. Okay, so anyways, but I didn't mean to upset Benny. Okay. Cool, right? All right, so anyways, technical analysis is pretty straightforward. Okay. And if you're a bull, this is probably the cluster you're looking at. So a bull would kind of think, maybe if we're down here, maybe we break out and do something like that. And that's your dip there. It's probably not going to happen today, right? That's probably tomorrow's trade. So maybe you take that in Asia. You know what? I'm not sure about Brazil, because it's not easily traded in the foreign exchange market. So I'm not an expert on that, except I know, obviously Brazil's a huge exporter, and a lot of the stuff goes to China. So if there's in the media, it sounds like China's crashing, but China's importing a lot from Brazil. Last year was a big year. So as long as that engine keeps happening, Brazil pulls stuff out of the ground and sends it to China. If that keeps happening, right, better than Argentina. Right? Is it? Michael says, oh, if oil falls, short Swissy, and well, what do you mean short? Do you mean short yen? Well, that means oil's probably going up. So no, but you might mean short yen pairs. You got to be careful, Michael. I have no idea what you're talking about. So if oil falls, that's good for Japan because they import all their energy. Is it a risk-off scenario, global macro? Well, then yes, that would make oil fall, but then yen would rise. So you need to write complete foreign exchange sentences, right? Because your yen falling, right? Again, I don't know if you mean yen pairs or Japanese yen. Yeah, right. Which now you're saying is yen pairs. So this is why I'm picking on you right now, Michael. You said yen, short yen. Well, that means you're telling me the yen would get strong. If it's yen pairs down, yen is up, and you just said short yen, so yeah, so I got to pick on you, okay? Because what you said to me was the opposite of what you meant. Just we got to have the right language. All right. Is it risk off? See, oil's not going to make Japanese yen get strong, especially falling oil. Okay. Because if oil prices go down, so let's do it this way, oil. If oil prices go down, will Japan want to buy more oil or less oil? If oil goes down, if oil prices go down, will Japan want to buy more or less? Japan, more oil. Okay, so what do they give up to get this oil? Remember, it's a trade. So what do they offer for the oil? No, Brooke, you can stockpile oil. Maybe not enough, but they can stockpile it. Okay, a user of commodities will buy as much as they can on the way down. Okay, so Japan gets more oil, but they have less yen. Where does the yen go? Okay, let's say it this way: they're long oil and they're short yen. It's like a currency trade. The yen falls in value because what it does is if Japan has less yen, it goes into the open market and the supply of yen goes up, and therefore the value of yen goes down. Okay, this is the interbanking system. This is the quantity of yen. Whatever measure you think this is, arbitrary. Okay, and this is that's quantity. This is the purchasing power of yen. Okay, price basically, right? 1, 2, 3, 4, so on. Okay, cool. So let's change color to make it nice and pretty. Ah, dang it! Don't click that button, guys. All right, let's do it again. Okay. Okay. So the supply increases in the global market. Yen goes up because they're giving up their yen to buy oil. So now there's more yen in the market. Okay. And it was worth P1. But now there's more yen in the world, and we've moved to a new equilibrium point. And it's now, the purchasing power is now P2, which is down. So if the Japanese are buying oil, the value of yen will go down and the value of oil will go up. Okay, and I can, of course, do the flip side of that and do it for oil. Okay. Okay. So you can't say if oil does that, the yen will do what your hypothesis was. However, there are times when they are doing exactly what you described, but not for the reason you stated. If it's a risk off global macro move, it has nothing to do with oil per se directly. Okay. Then if the global economy slows down, demand for oil falls, supply of oil goes up because we're not using as much, prices of oil would fall, but also Japanese investors are cashing out of investments around the world because the global economy is contracting and they're starting to lose money or lose profit or whatever. Their investments are starting to decline. So they cash out of those investments, bring their money back to Japan, which gives the Japanese yen strength. And you'll say, well, Wayne, look, oil down, Japanese yen strong. You just told me the opposite. I'm like, hell yeah, I did. But you have to understand the reasoning, right? You have to understand the logic of how the market works. You have to understand the global money flow of economics, international political economics. I did that at Harvard. What a fantastic class, international political economics. I studied 1,000 years of capitalism. Pretty cool, right? But you're right, I don't know anything about socialism, but I know a heck of a lot about capitalism. So anyways, so make sure you understand the reasoning, sort of Ray Dalio style. If this happens, there's, this other thing is likely to move. For example, the price of a chicken is equal to how much grain you have to feed the chicken over the course of its lifetime. Cool. Let it go, let it go. Okay, so let's take a look. Yin, 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 yin. So one of the things we did in the swing trading group on Friday was develop contingency plans, since we're in this period where, do we have the false rally? Does it continue? Maybe. Or does the yen strength return and continue like we expect to happen soon? Well, yes, but maybe. But on Friday, we're sort of at the crossroads. It really could do either. So we created contingency plans for all the yen pairs, all the dollar pairs, and all the Swiss franc pairs to say, well, if the rally, even the false rally, but whatever that means, if the false rally continues, we would look to buy this, or this, but not that, or that on the yen pairs. And the same thing, maybe we buy these dollar pairs or sell these dollar pairs, or we would buy these Swissies, or we would sell these Swissies, depending on if the false rally continues or if the overall bearish trend takes over again. Okay. Jim, that's a very, gross simplification, but I'm okay with that. The redistribution of wealth for the common good, there's a certain level which fits like even a libertarian. Right, so if you study like John Locke, or who was before Locke? Maybe it was after Locke. Locke and who's the other guy? Dang, John Locke. So I read all their stuff. John Locke, and what was the other guy's name? Anyways, there's to degrees which even a libertarian would say some use of government, like for war, like protecting what is your own personal rights and stuff, but then anything beyond that is too much. But a government is supposed to have certain basic rules, right? Hobbes, thank you, Patrick. So Locke and Hobbes. So you should read both of these guys, and that's an interesting place to start with. Libertarian, like everything you own is yours. Nobody has a right to that, and all that, But what do you do in the case of if your land is attacked? All that kind of stuff. And what if someone steals your stuff? Do you have certain rights? So you say, well, a government's supposed to be around, and I will give some taxes to the government, but it only has the right to protect my shit. That's how a libertarian thinks, right? If someone crosses my fence, someone's going to protect my stuff, right? And then you can work your way up from there. I think a lot of people would say libertarianism may be too far, where, well, what do you do with the poor and the sick and the elderly? And what do you do when the economy does crash? How do you handle if there's 40% unemployment? Like Spain on a regular basis, right? So what do you do in that situation? Should the government help out, and to what degree? So then you say, well, libertarianism might be too far one way, so we will add a little bit more power to the government, and therefore the government's going to need a little more taxes, and they'll do things like provide a safety net, provide unemployment insurance if the economy collapses and stuff. But then it goes too far at some point, right? And the degree to which you go from government basically does nothing, or like no government, to everyone working for a government, to the degree which you choose to fall in between will have consequences. And the fact that like Spain on a regular basis, let's say, has 10% unemployment, and France on a regular basis has 8% unemployment, in Italy and Greece, right? But not Germany and not Holland and not London. Well, what determines, like, why do these economies have higher levels of unemployment on a regular ongoing basis? And I mean over the last 50 years. Why is there a dichotomy? Are the people lazy in Spain and Italy and Greece? I'm not answering that question. The question I'm saying is, why does it seem to be going for that long period of time? And it's the form of capitalism that they've chosen. Right? So it's hard to get a job, but when you got a job, you're never going to get fired. And that lower productivity, because you can prove that'll lead to lower productivity, well, then it's stable, but then there's lower growth and there's less jobs. And why would you hire an unskilled person right out of college when you have someone that's been working for 25 years and all this kind of stuff? And there's not a lot of government incentive to create a better industry or to create a more competitive company. The government doesn't really support that either. So there's consequences to all these decisions. That's all I'm saying. And it's great to kind of study these things and see how things are created. So, for example, like I wrote a paper about the Black Plague being the best thing to ever happen to Europe. And it led to the development of entrepreneurialism, right? And then another one you could say, why did the Genoese and the Venetians, why are they not ruling the world right now? Portugal, tiny little Portugal, almost ruled the world. Look at Brazil. They speak Portuguese. You go to India. Oh, my God. Go to Goa. They speak Portuguese. You're like, that's amazing. And maybe that's pretty much it, right? And they're like, well, the Dutch almost took over the world. Look at the Dutch West Indies, the Dutch East Indies, the Dutch everywhere. But, Holland doesn't rule the world right now. They got really close. But, so then how did Spain really take over a lot? How did Spain and what happened and why in the 500 years that the Europeans flourished, why didn't China flourish in the same way? How did China end up in 1950 being dirt poor? How did that all happen? And it's a really interesting thing to study, the history of economics, but from a culture society point of view, and it's really an interesting thing to do. And so anyways, to me, it came down to the Black Plague. And the Black Plague destroyed 50% of the population of Europe, so it wasn't good to be king anymore, because you didn't have anyone to rule over. A lonely king is not a powerful king, right? You're like, where's all my workers? Who's going to feed me? Who am I going to tax? Like, there's no one working the fields. All of a sudden, kings were poor. So all of that failed. And that's why you get like Genoa and Venice. They start to take over because now businessmen were rich, not the king ordained by God, but the businessman that was investing in the trade. And the ships were going farther and farther out to sea, so they had to invent things like insurance. And city councils took over and became cities, not kingdoms. And all that kind of stuff is really interesting, but that didn't happen to China. So anyways, right? China didn't suffer from the Black Plague. So they didn't have that collapse of serfs and kings and all that. So anyways, I digress. But yeah, but no, I'm not an expert on socialism. But I know a little bit. That was a Jay-Z. That was a Jay-Z quote, just so you know. All right, so what do we do here? Well, if you are a bear because you expect the stock market to come down at the beginning of earnings season, then you're going to be looking at this, okay? You notice on this other move here, we were still above support, so you could be looking for this, right? But once you get through here, forget about it. Forget about it, okay? That ain't going to happen. Lower low really changes things, okay? So even if you're a bull now, let's say you want CAD yen to go up, that's cool, but I would not do anything until we're above there, okay? So let me do this differently. I'd want to see sort of this, then it'll probably do that, and then it would go up, and then it would come down, and then I would buy if I was a bull, okay? If I was a bear, it's much easier. Okay. There's really two plans, sell now or sell later. So which one are you? Yeah, well, be really interesting to see how earnings season goes. So if I was a bear, I'd say plan A, okay, at 81.50, look for a short. Plan B would be here at 81.87. So either 81.50 or near 82, although 82 is pretty high. Where is 82? No, that can't be. 82 is way the heck up there. No, it's got to be here. 81. Oh, that's a 68. 81.70. 81.67.7, if you want the exact number, would be plan B. And if I'm a bull, do nothing until those are breached. Yeah, Ed says, yeah, surprised in Macau they speak Portuguese. Yeah. But then you ask yourself, why isn't Portugal one of the richest countries in the world anymore? It certainly was. Why not? It was very interesting. And right, so like the Spanish were heading to South America. So why did Portugal go the other way, right? So I mean, obviously the Portuguese hit Brazil, but then the Spanish were taking over everything else around it. So even though the Portuguese had established Brazil, they're like, dude, we can't compete with Spain. It's 10 times bigger than we are. So you're like, well, let's go the other way, right? Let's go the other way. So now you're in places like Macau or Goa. Like you're in India and they speak Portuguese. You're like, what the, right? And then you're in China and they speak Portuguese. You're like, what the, right? So what happened? It's cool. It's cool to answer those questions. Okay, so you see how I broke that down, guys? if I'm a bull, I need support, but I need a higher high, higher low. So where are my break points? And if I'm a bear, I need resistance, and I have two, which are obviously the break points for the bulls. So now, what if you wanted to be both? Let's say you were going to be short-term only, okay? Right? Well, then somewhere in here, you're going to be short, right? So you could drop into a 5-minute chart and start looking for reversals. You got that whole zone. And then you can ask yourself, well, what about the dailies? Is this meaningful? Oh boy, huh? Isn't that nice to know that this is the predicted bottom for the day? Yeah, it's CAD yen. Uh, yeah, is that right, Mr. T? Now, are you profitable, Mr. T? Oh, if I were to sell this, well, I suppose the time frame, right? But to me, like the Fibonacci's are irrelevant. Like I'm still going to sell it there. It's not because it's a 618, but I'm like, oh, look, it's a 618. But what it does is say if the 618 holds, that predicts a 1382, which is tomorrow's M1. So that's tomorrow's target. So what this does tell me is this. Okay, it fell, it retraces, it'll hit that, and it'll drop and hit tomorrow's target. So I'd be selling at, let's say, 81.70 for a target of about 81. So there's 50 to 70 pips in there. Well, yeah, Mr. T, with 100 pounds, I don't know. I know if you open a new account at Trader's Way, they will match you. So if you put in 100, they'll set you up with a 200-pound account. I think it's in dollars though, but you have to contact support first, and they'll do that. And then if there are if there are people that are considering trading other people's money and starting a track record, I have a program for you as well. But you have to have at least $5,000 to trade with. I won't touch your $5,000. You have to have at least 5,000 US dollars. If you can do that, I can get you to the next level. Sure, Mr. T. But that attitude almost guarantees that that's what's going to happen. So I think you should, Mr. T, focus on your education first. Why teach yourself how to trade through trial by fire? So anyways, guys, if you're a bear, that's kind of what you're thinking, right? So, right? So you're thinking there resistance up here, right? There was resistance up here, and now there's probably going to be resistance up here. So it keeps making lower highs. So in that case, you may continue. Azabu, can we email what? Oh, what to be? Yeah, no. If you are ready to trade real money, you can't lose money, right? Come on. If you're ready to trade real money and you need to create a track record of success over the next couple of years, and your track record of success is going to be so much more if you're trading other people's money, right? But also, if you doubled, right? Let's say you're doing 5% a month and you have 5K. Okay, 5K at 5% a month. Oops, at 5% month over month. Okay, that's what you're producing. That's about, not quite, but about 100% a year. Right? You double your account every 12 months. So you start with, right, year 0, you have 5K. Okay, at the end of year 1, you'll have 10K. At the end of year 2, you'll have 20K. And at the end of year 3, you'll have 40K, right? And now you can go out to your clients, and after 3 years of trading, you could say, well, the markets were, they went from bullish to bearish to risk on to risk off. We had some geopolitical risks and we had some other big sort of singularities, and the market changed and changed and changed again. And over that course, because of my patience and my discipline and my analytical based trading, my returns were steady, even though my returns were consistent, even though the market was very inconsistent over that period of 1,000 days. Right? So that's your 40K. But what if you started with 25? Okay. Because, right, other people were with you. Year 1, at the end of year 1, you have 50K. At the end of year 2, you have 100K. At the end of year 3, you have 300K. As long as you're just eking out 5% a month on average. Sometimes it'll be better than that, sometimes it'll do less. The difference between whether you make more than 5% or less than 5% should be the beta, should be the market. So in September and October and November, you make 8%, but in July and August, you make 2%. You see what I mean? But it all averages out at the end of the year. You're just roughly doubling your money. And so what seems better to you, 300K at the end of 3 years or 40K at the end of 3 years? So if you have your real $5,000 and you're really serious about trading patiently, conservatively, with discipline every single day for the next 1,000 days in a row, I might have something for you to get you to that first 25. Because you can see what ends up happening is, right, you end up making $260,000 more. And that's called compound interest, the most powerful force in the universe, according to Einstein. The difference is 260,000. Would you like 260,000? Then email me, wayne@fxbootcamp.com. Pitch me. Tell me you're great. Tell me how wonderful you are. Yeah, who doesn't love compound interest, right? Like I said, if you took that Lira trade back right before the Lira crash, right before the Lira crash, I did a thing on carry trades. and compounding interest. You guys remember that? But let's say that the lira didn't crash. Let's say the lira didn't do anything. Okay, let's just say it didn't even move 1 pip up or 1 pip down. You have over 100% return on investment just on interest. Since I did that conversation, it's probably like 112% return on investment, interest only. Okay. So yeah. So like, again, so what we did last week with the swing traders is we created contingency plans. If it's risk on, we'll do these, we'll consider these 5 or 6 trades. If it's risk off, we'll consider 5 or 6 of these other trades. You see what I mean? And so that's how we handled that. Does this look bullish? Okay. Does this look bullish? Does this look bullish? Well, you notice they're not the same. I only trade peso at the beginning of the month, okay? But if you're trading it as a high yielder, then yeah, you need to buy peso, you need to buy rand, you need to buy lira. Those are 3 big ones. No, as a boot, you don't have to establish a track record first. It's a program so that you can establish a track record. Right? And the funny thing about it is, you could say, look, I grew my account at 5% a month, and in 3 years, I went from $5,000 to $40,000. And people are like, 40,000, oh, that sounds good. Or you say, well, I grew my account at 5% a month, right? My 5,000 plus I get 20,000 from investors. So at the end of 3 years, I grew my account to 300,000. And they're like, fudge. Really? Holy smokes. It's the same 5% a month. But at least you have experience now trading other people's money. Which a lot of people just, it's hard when you're not trading other people's money. They're just like, oh yeah, it must be a hobby for Ezebu. You're like, a hobby? No, it's a career. Well, it's not a career unless you trade other people's money. Otherwise, it's just a hobby, right? What caused the Turkish lira to crash? Well, back when the Turkish lira was a big story, I did a big presentation on it. I must have done, I'd say at least a half an hour discussion about that so that people could understand, because it was in the news and all this kind of stuff, and the media was saying really strange things. So I discussed it at length. So let's, right? Everyone in Turkey went, holy smokes, I can borrow free money? Free money. Well, for a Turk, that's like unbelievable, right? Like, you would be a fool not to borrow that money. So the Turks borrowed a whole bunch of money in dollars and in euros. Great, everything's good, until the cost of that money goes up. For example, the Fed starts to raise interest rates, and those loans get very, very, very expensive in terms of lira. So typically when a country borrows money, you just go into your bank and say, or into your vault, because you're like Mr. Money, right? So you go into your vault and you're like, well, you just grab a whole bunch of your dollars and you start paying your loans back. The problem is, what if you go into your bank and you don't have any, or your vault, you don't have any dollars, all you have is lira. Well, now you go into you grab your lira, you go to the interbanking system, and you exchange it. So you're buying dollars to pay back your dollar-denominated loans, and you're selling your lira. But of course, you're doing it at 100 billion US dollars at a time because it's the whole country. So here's the problem. You flood the market with lira, which drops the value of the lira and makes the US dollar stronger, which makes your loans even more expensive. Then the Fed raises interest rates again, making your loans more expensive than they used to be in terms of lira. So now you grab your TL, right, and your stack of TLs. You needed this much last month, but now you need this much. So you take that, you flood that into the global market, which lowers the value of the Turkish lira even more, which raises the expense of your US dollar denominated loans that you got for free, but you have to pay back in dollars, which ain't free. And it's this vicious cycle of Turkey devaluing, not on purpose, not the government, just to pay back their loans, they're devaluing their lira, so the dollar denominated loans are more and more expensive to a Turk. Now, if Turkey had exported more stuff, if Turkey was the center of exports, like Japan or China does, right? Then it'd be flush with foreign currency reserves, right? You see what I mean? But Turkey doesn't really export anything. So the only way to pay back their foreign denominated loans is with their lira, which weakens the lira, which then weakens the lira further, which then weakens the lira further. And then you add how about this, non-traditional government leader at the helm. And then on top of that, make sure there's a hostage crisis going on at the same time. And it just, Trump came out and said no more dealing with Turkey. And so like lots of stuff just went crazy there for a while. And the Turkish lira just became worthless overnight. So then Turkey raised interest rates to like 20%. Did you go what? So with modest leverage, you're going to make 200% a year. With extreme leverage, you're going to make 2,000% a year, but you probably don't need that with lira. Anyways, so that was my 10-second version, which was what, 4 minutes? So there's the 4-minute version. If you need anything more than that, you're going to have to like go back in time and find the video. No smelly. No, 100. The trader will keep 100% of the profits. There'll be a small, tiny monthly fee, but just to cover the expense. But 100% of the profits are kept by the trader. Okay. So yeah, 100% is pretty much fair, I think. Smelly rat. All right. Where can I get the video? I don't know. It's there. I mean, you need to be a subscriber and be here every day. Imagine that. Imagine if you said to yourself, man, I've heard this 3 times now. That's how smart some of the people in this room are. They've heard it 3 times. They know it. So now they can just, they're talking to their relatives, but maybe a future client if you had a track record of success. And then they're like, oh, are you going to invest in things like Turkish lira? I heard about that a couple of years ago. It was crazy, man. Like, oh, well, let me tell you about what actually happened. And they're like, oh? And you say, yeah, well, it comes down to how much of Turkish industry actually exports the products and services to foreigners, because this impacts the amount of foreign reserves in the economy. And this is important, especially, and then you just go into your speech, and all of a sudden at the end of it, they're like, you're so smart, I want to invest into you, right? Boom! Magician's in. Magician Technician. That's a great name, Magician Technician. Cool. So anyways, that's cool, right? You guys are smarty pantses now. So I've gone way past, I've gone 15 or 20 minutes over, so I guess I'll pull the plug. I'll see you tomorrow, right? Please leave a thank you on the recording. Please do the like right now. Come on, thumbs up. Give me the thumbs up right now. Come on. Just do it before you go. 1 second. Just click the little thumbs up stupid thing at the bottom of the video. Just do it. Come on, just do it. Just a little click. Just click, done. Oh. Okay? And I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Visit Trader's Way. Open up an account. And then down below, you'll see the links to all my chart templates and stuff. So go to Trader's Way, get yourself an MT4 account or MT5 account, and then go down here and install those files, and your charts will look like my charts. Telegram. I live in America. I don't use Telegram. So, cool. So, anyways, I'll see you tomorrow, right? It's time, say goodbye. La tsunami, oh, my brothers, my sisters, oh. See you tomorrow.